When you're signing documents on your next commercial real estate deal, there's one signature that could put your house, your savings, and all of your personal assets on the line. I'm talking about the personal guarantee. Before you sign one, you must understand what you're agreeing to and what the lender can do to come after you and your other assets if the deal goes sideways. In this short clip from a coaching session, I break down what a deficiency is, the critical difference between recourse and non-recourse loans, and the single asset entity structure that every sophisticated investor uses to protect themselves. This is information that could save you from potentially catastrophic financial mistake. So let's dive in. The question is the loan going to be personally guaranteed or is it going to be corporate guaranteed? Here's why that matters. Let's say we got $1 million property. You've got $750,000 in debt. If the lender has to foreclose on the property and the value goes down to say $600,000, but you still have $750,000 loan on the property, that $150,000 is called a deficiency. And it would actually be higher because there would be late fees and legal costs, and this could be up to like $900,000. So you'd have somewhere between $150,000 and $300,000 deficiency. The deficiency is what the lender is still owed. If the loan is recourse, then the bank can go sue the borrower personally for the deficiency. They can go after their other assets. The loan is non-recourse. That means the bank has no recourse towards the borrower. The property is their only security. If there's a deficiency, the lender has to eat it. It's all about how do they go after the deficiency. The guarantee, that's a pledge, right? It's a contractual agreement in the event that there is a deficiency, that somebody is going to be responsible for that. You always have some sort of guarantor. The guarantor can be either personal or it can be corporate. If it's personal, the borrower has to provide a PFS, a personal financial statement. They need to show that they have net worth. That's at least typically what the loan amount is. Here, it would be balance sheet, income statement, all financials, basically. It's a totally different analysis when you have a corporate guarantee, because then you got to look at all their business lines, the revenue projections, their burn rate, all the stuff of analyzing a company versus how much does this guy have in assets and how much debt does he have. A personal guarantee is much easier to underwrite. The loan itself, the bank is going to want the property held in a single asset entity, okay? And that just means that this is an LLC that owns nothing else but whatever the loan is loaned against. And the reason for that is if you were going to go and buy 6 different properties, you would want each property in a separate LLC. Because if Joe, the tenant in unit number 2, slips and falls on the stairs and blames it on you for not having the sidewalk shoveled, he sues whoever owns the building. Now, you would never want that in your personal name, right? You would want it in an LLC that owns nothing else than that building, because if there was a lot of assets in there, then he could go after you for more. If you're only worth $1 million, the most they're going to get out of you is $1 million. Almost always, you're required to have, at least for agency debt, CMBS debt, all that stuff, you're required to have the property owned in a single asset entity. The borrower is the LLC, but somebody, a person, has to sign as the guarantor. Typically, if it's like 1 or 2 owners of the company, they don't want to pledge their personal assets. The owners of the company would rather not have to do a personal guarantee. They would want to have it be a corporate guarantee. The lender wants everybody that they can possibly get to be a guarantor, because it's just more people that they can go after. If things go sideways, that reduces their risk. It's all about mitigating risk. When it comes to financing, presenting the right package to the lender makes all the difference. So to help with this, I put together a commercial loan documentation kit that has all of the checklist and forms that you need to put your best foot forward when presenting a financial package to a lender. It's free to download, so just grab it from the link below, and thanks for watching.